Coming up in this show, I'll bring you a big picture analysis of silver and gold. Get ready for a coming correction. Ivor's got a trade idea with great analysis and a bullish setup in the India ETF. I'm going to show you our special day trader service, and you're just going to love what you see here. And then I'm going to bring you analysis on the stock market, multiple time frame analysis in the S&P 500. A little different today. It's for all trading styles, and I'll really give you a good picture of how to use our MCM and our other tools when you do your analysis for whatever kind of trading style you have.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
If you're new to us, get acquainted. Sign up for Snapshot Lite. This is free information on the S&P 500 every day. Just go to the top of our website and subscribe to that in the free stuff. Snapshot Lite, Matt does an amazing job with that every day. If you're on YouTube, subscribe to our channel. Click the notification bell and get our videos. And do like this video. Give it a thumbs up. And on X, follow us at askSlim. Any questions, write to Matt at askSlim.com. Big picture analysis, a coming correction in silver and gold. Of course, those of you that have followed me know that I've been very bullish on both of these metals and looking for higher prices, which they both certainly have gotten up near our targets that we had for these markets, and actually beyond our targets that we originally showed. Now, it looks to me, based on our bigger picture analysis, in other words, looking at the monthly charts, that there is a likely correction ahead. Now, based on the amount that this market has moved, it could be sharp, and based on the phasing I'm going to show you right now, the declines could be sizable. That probably would look like even a shakeout, like it has other times, but I think, and I'll show you, that it would be a very, very good buying opportunity were that to happen. Let's take a look at the silver chart first. And this is a monthly silver chart going back to 2004. So we have over 20 years right over here. And of course, it looks like a bunch of squiggly lines, and this is our reversal scout right there, that moving average that's on there. And that's helpful to us in understanding the momentum and the rhythms that are in the market. I'm going to put the cycle analysis over this, and you will see how things just begin to absolutely pop out as we look at this. So I'm going to go to our analysis that was just updated, and you can see in here all of a sudden, wow, the cycles are just absolutely popping out. So what does this mean? Well, these are what we call harmonic families in here. And when you look in here, there's a big 168-month cycle that's right in there. That is very continuous. If I blow this out way over here, you will see how those cycles go back, well, for decades. Now, how they break down is what's really important here, looking at the cyclical patterns that are in here. And what really is important is where there's a nesting here in this intermediate and minor cycles as they come in here. When you get into these periods right over here where the upside move runs out of energy and it goes into a correction in multiple periods of cycles, you get the biggest downside movements. And I've highlighted those in yellow so you can see where they come in, and there's a nesting. So this was 3 cycles nesting, this was 2 cycles nesting, this was 4 cycles nesting, as you can see right over there. So we're coming to a period right now where we have two cycles that are nesting right there. So you have, in this case, where you had this break right over here, where the market fell. I mean, this was silver moving down from 30 right over there to around 17.5. So this was a very sizable decline. And during these corrective periods, the declines can be sizable because you're essentially shaking out a lot of longs. You can see in here that this cycle right over here, which of course is 3 years long approximately, finished well above where it started. And that's what makes what we call a bullish configuration. And of course, this one is way, way above where this one started over here. And we were very bullish during this period as we saw these cycles turning upward. And here you could see where it had this consolidation, gave us a little buy zone, and when it broke out, it just absolutely exploded. Got through those first targets and then it got way up in here into these next targets. Let's look here at this cycle, and this is what's really important, where you have this nesting period right over here. And gold and silver have perfect synchronicity on this, and I'll show you the gold chart. So here we are coming into this yellow timing zone right over here, which points out to sometime end of the year through the first quarter of next year as the ideal trough, where that lines up right over here. Of course, it could be a few months on one side or the other. But once this top is in place, then it tells us that, and we look at the shorter time frames to get that knowledge, it tells us that this corrective phase will then happen in this yellow zone. This is an important level, which is the 78.6% level from the all-time highs at around 42.12. Now, right up over here are other resistance levels in here that we put there. The all-time high at 49.77. Remember, it got up to $50, near $50, and these are other fib extensions up there. Now, we don't know for sure whether this is going to continue to blast off and get into these levels above $45 before we get into this correction, but once the correction hits, we'll know that because we'll be getting downturns in the daily and weekly charts. Right now, we don't have that. All this is a heads up that there's a correction coming, and when it comes, it's likely to be where there's a shakeout. So the highest level of support right over here, which is the dominant 23.6, and here right over here is a minor support. So the dominant comes off of this low, the minor comes off of this low, where this minor cycle was right there, and that points to levels over here around 36.5, 36.25, which is a reasonable pullback. If you look at all of these other periods where it pulled back, well, those declines percentage-wise were bigger than what I'm suggesting right now. So this is a pretty bullish call when I talk about a decline only to 36.5. That is if the peak comes right over here. That, in my opinion, would be an excellent buying opportunity. And you could see for our members, we have this labeled as a buy zone. So this is the beautiful harmonics in here. If you want to learn about cycle analysis, go to askSlim.com to the workshop page. There's a tab up on the top of the page, and there's a free video there, some free information. So you can learn about our workshop and learn the basics of cycle analysis looking at that. So again, these yellow areas are periods of high risk, and we are coming into that fairly soon, if not right now. This extreme bullish translation that you see right over here, which is this cycle rising for almost the entire time period, is very bullish for the time frame after this corrects. And you can see in here, all metal potential surge 2026 and 2027. That's when I believe we're going to be getting to all-time highs right over here. So that is a look at the silver market. Let's switch this over to the gold market, /GC, and this is going to look pretty similar. You can see in here these beautiful cycle harmonics and these yellow zones, this period of high risk, and the same thing that we see right over here where we look at this time frame. Let's just look at this last cycle and where we are right now. And that gives us into this period of correction. Of course, we don't know whether this has peaked yet, And the ideal troughs are out here late 26 through late 25 through early 26. And you can see that, well, the next levels of resistance are around just over 4,000. This area up here is 4,200. And it certainly could spike up through there before we get into this corrective period. Again, we look at shorter time frames to tell us when the peak is in place, and we don't have any sign of that yet. So we've been extraordinarily bullish. You can see in here in beginning of 2025, I thought that what was going to happen was that there would be a trough or a minor decline into February or March, and then through June, a rising phase. And you can see in here, this was where that low came right over here, early 25, and then the market moving straight up over there. So well beyond the target that we had, where we thought would be up to about 2,800. It blasted through that, of course, and got much, much more bullish. And again, we're looking at a pullback in here likely. We're at the peak here at the top of this fib extension right over there. That's the 100% fib extension. Then the support's right over here around 32.70 down to around 32.15. That would be the expected target and buying opportunity if it got down there. And of course, it could be sharper. It depends on what kind of a shakeout we had and what the conditions were of all the markets, because there would likely be during that period, it would probably line up with a lot of assets getting sold, a lot of risk assets, because the stock market, of course, has gotten extraordinarily high and to extraordinary valuations. So somewhere in this period, the gold pullback and silver pullback will probably be in alignment with pullbacks in other markets. So that's often what happens historically. So this points to, again, a pullback into late this year or into early next year, and of some significance, enough to hurt, and enough, of course, maybe to give us a good buying opportunity. Again, we do not see the peak yet in these cycles, and if I go back, you could see the extraordinarily harmonics in these cycles. We're in this period of 2 cycles correcting right in there, and that is likely to bring the pullback we're talking about. I'm not saying to short this market, because it's extraordinarily strong and all of the momentum conditions are incredibly good, and they have been, and that has kept us on the bullish side of this market. We're going to look for the short and intermediate term signals that we are getting into a corrective period. Of course, our members will get that information from us when we believe that it's a high probability that that has begun. That is the big picture of the silver and gold market. This is a little information for you about when you look at our presentations and what we do as we look at our analysis, and what that means for you, of course, as you use what we say or what anybody says, and the important aspect of trade ownership.
This is an askSlim intermediate term long idea here in the iShares MSCI India ETF, or the INDA. It is September 11th, 2025. I think you will find this really very interesting. We are seeing some of the country ETFs already in a very bullish overall condition, but what you'll see is there are some signs of improvement on the short term as we look at the overall bias. And what we are going to use here is the askSlim MCM Pro, which is available for level 3 and 4 members at askSlim.com, to help us to identify some of these shifts. So let's go ahead and do that right now. Okay, so this is the askSlim MCM Pro version, as I said, which is available for level 3 and 4 members. I have changed the trader type to intermediate term. So as you can see, it is using monthly, weekly, and daily data, and I've sorted by ETFs only. And what I've done here to help me to understand what's going on specifically with the country ETFs is sort by name. So what I'm going to do now here is actually scroll down, and on the right side here, you will see the trade setup condition, which is really a sum of the evidence based on all of our indicators across a monthly, weekly, and daily time frame. And you can see that the ARGT, for instance, has turned down clearly. You can see if we keep scrolling down here, very bullish action in the large cap China, very bullish action in the EWZ, both names that we still like a lot. Let's just keep going down here. And you can see right here in the INDA, there's been a shift as of right around the close here to neutral on the intermediate term condition. This is something that you want to watch very, very closely because actually, as a level 3 or 4 member, you can actually click the notify button and you can be notified of changes in your overall bias conditions. I like to watch for changes from either slightly bullish to neutral or neutral to slightly bullish. That shows you the early stages of a shift coming. That's what I personally like to always watch very closely, and you can actually be notified of that via your desktop app. So let's go ahead now and see the charts. So I'm going to go ahead and move that over, and as you're able to see here, this is our both weekly and daily cycle analysis chart for the INDA. Let's go ahead and open up the weekly. Okay, so you can see there is a trough that is also due here, 728 to around 10.6. So there has not yet been a confirmed low, and that is really all in line with what we just saw in the MCM, but it is certainly worth watching for that low to form. There is a zone from right around 5180 to 5081. We are looking for it to hold that area on the downside and move back up. What we are seeing in terms of the overall cycle structure here is a higher low basing cycle, which is overall quite positive as long as we're holding this zone right here that I have just highlighted. We would be looking for this to turn its way back up to the upside and move through the 61.8 at 54.41. If that can happen, we would be looking at the 78.6 at 55.12, followed by the old high at 56. If it moves over 56, then this old high would be a reasonable target after that at 59.49. So as you are seeing, it is always level to level, right? It has to get through one level in order to open the door to the higher level. If we now shift over to the daily time frame, you will see that there is also a daily trough that is due here, 819 to around 98. We have really sold off cleanly into that, and we have now turned up. So I'm looking for this to hold right around here from 53 to 52.80, hold above this higher low at 52.38 right there, and then to move up into the 61.8 to the 78.6 from 54.41 to 55.12. So that overall risk would be right around 86 cents, and I'm looking for a move up over at least 120 here on the upside in the INDA. Okay, so this is our trade idea to the long side in the INDA, along with our overall logic associated with it. Obviously, if you want more of our trade ideas, please head over to askSlim.com and check out a level 3 or 4 membership. If you guys have any questions, as always, please feel free to leave a comment in the comments section below, and I'm happy to answer them. Thanks again, and have a great day.
Watch this. Arby is just amazing. Before we move on to the stock market analysis, take a look at our day trader service. Save over 25% for 3 months. It's just $99 for the 3 months. That's $33 a month versus $44.95 a month. And you can try it risk-free. If you're a day trader, imagine that. 14 days, you can take a look at it. You don't like it, doesn't fit for you, let us know. We'll give you back your money. This is so important to you because you can avoid those low-quality trades and stay out of trouble. I'll show you more about how that's true. You'll identify and align with the likely dominant directional phases. So you get on the right side of the momentum trends, and that, of course, gives you a higher probability that you can stay in those trades longer, ride that move when the conditions support it. I can tell you, as I've been a day trader for 50 years, that it is so important to get on the right side of the market and to find the edge. When I was on the trading floor, of course, our edge was, buying on the bid, selling on the offer, and then markets changed as things went by, and high-frequency trading and digitalization, so much changed, and that meant that we had to find new edges. The edge right now in this trading world is about understanding momentum, and our products are really built around that. So you're going to recognize when the intraday price moves are moving or when they're stalling or reversing, because we can spot those early signs of potential shifts. Understand the importance of the Fibonacci levels as we put those important levels on the charts, and you can see how the key support and resistance zones do impact trading price and moves. Again, it's only $99 for 3 months. I mean, that is just no money for the kind of information that we give you, and it's risk-free. You can try it for 14 days. Write to Matt at askSlim.com. This is what it looks like. I mean, I'm going to show you a little bit of it live a little bit later in the show if you're watching through the whole show. And what you see on the left here is our impulse monitor. This gives you a sense for the general trend, intraday trend. And when the turbo goes on, we know that there's extra buying coming in or extra selling if it was red. This is the 20 stocks that are in there right now. If you want to trade stocks intraday, of course, these are the widely held and high flyers that are in there. And we have a replay system. You can go back and look at the whole day because we record it for you. And then you can review what your trades, what the trading situation was, build your style. Just fantastic. We have just so much in here that is crazy. This is a picture of our cockpit down over here for the futures. This is the picture of our Zoom cockpit in here, which has Matt's important levels that are in there. Again, I'll show you that if you're watching the full show in just a few minutes. And just a great way. Our new trader radar really helps you in intraday decision making, and you can see how this really would help you stay on the right side of the market. You can get all of that 25% off. Just go to our website, askSlim.com. Click up here where it says special offer and save. Information is in there. You can even watch a 2-hour workshop that Matt put in there that really explains this information. And again, remember, this is a 14-day period that you can look at it. And then if it's not a good fit for you, well, let us know. We'll give you back your money. That's just an amazing look at our day trader, and I'm going to show you more as I use it a little bit forward in the show. All right, stock market, the market brief. Well, stocks continue on their upward magic carpet ride. Magic Carpet Ride, of course, the song that was done by Steppenwolf in 1968. I always thought the Magic Carpet Ride was about people being on drugs. You know, at that time they were writing a lot of things about getting high. You know, you got to get higher and higher. Well, this market has kept going higher. But truth is that Magic Carpet Ride wasn't about drugs. It was actually about the lead singer who got a new great hi-fi system, and he loved the music so much it was like the music floating on a magic carpet. That was what he thought. Of course, all of us thought he was on drugs, just like a lot of these buyers in the stock market. Well, that's just my opinion. Oracle earnings they missed. Big deal. The stock soared 36% on a huge backlog for their, they build out AI infrastructure. So that stock just absolutely exploded. Of course, that helped the market significantly. Robinhood and AppLovin, they had big gains as they get added to the S&P 500. The big disappointment in there was that MicroStrategy, or Strategy as they want to be called, was not included. That stock is absolutely getting killed, and I believe that that's the canary in the coal mine for Bitcoin, which I think is going to suffer similarly. UNH, well, that was a hated stock. The stock went from 630 all the way down to 237. It rebounded because of course, it seemed so cheap, and we know that Warren Buffett invested in the stock when it was way down there. And the news came out that they got good ratings on Medicare Advantage, so the stock rebounded 14%. That, of course, helped the Dow, which had some giant upside days. Tesla, well, it's jumped 11% on the week. Not a lot of news out there except for the bulls hyping it, and it is the most shorted of the Mag 7 stocks. So it starts to move up, and the shorts do start to scramble. Inflation news was mixed. CPI down 1/10, PPI a bit hotter, up 4/10. That was a little bit more than expected. Year over year, PPI 2.9%. Of course, that's a high inflation rate, but not high compared to the 9% we saw on the COVID pump. So the Fed right now is looking at the employment situation, which looks really bad. As a matter of fact, new claims for unemployment were the highest in 4 years. Investors loved it. Right now, bad news is good news. We can see that, and bad news means the bond market's going up, and the interest rates are coming down. But you know what? That isn't always good news, and I'm going to show you a chart in a couple minutes that will just point that out to you. Stock indexes for the week, well, they're up about 0.75% to about 1.5%. The S&P 500, NASDAQ, the better ones. The Russell is the weakest. And we're seeing today, as the stock market is still looking strong, looking at the S&P 500 and the NASDAQ especially. Well, we're looking at the rest of the stock market, and that advanced decline is not good today, and we see the Russell and the Dow are both falling pretty hard. So we'll get a mixed market again, but again, this is a market that is rotating, and when you get a market that is rotating and the indexes are moving up, it feeds on itself, and rotation tends to be bullish, and we're seeing that, despite the fact that the valuations of the stock market are at record levels beyond any records that we could ever dream could really happen. The buyers are finding ways to look for things that are depressed or look for things that haven't moved much, and that keeps feeding the market moving up. And if you remember what we said last week, everything we pointed at was bullish, and the markets continue to move up. This is a bonus chart that I want to show you right now. I just said I would show you something that is about interest rates, and this is a really odd-looking chart. But when you get the focus on it, you'll really get an idea what I'm looking at here. This is the S&P 500 versus 10-year yields. And they have almost completely positive correlations going back 26 years that we're looking at here. In other words, when the stock market goes up, yields are going up. When the stock market goes down, and especially when the stock market goes down hard, then yields go down. And this is a perfect example of it. The yields were going up here up till 2000. You can see right in here. So this is your yield chart. This is your stock market chart. Yields going up as the stock market went up. As the bear market took a hold, yields went down. Here you see, as the market made its bear market bottom right over here, stock market going up, yields going up. All this positively correlated. Here's where that peak came in 2007, and we had a devastating bear market, and of course yields were going down. Again, picture this. Stock market goes down, yields go down. Here you could see a choppy situation right in here, and the yield market almost perfectly tracked it. Both up together, both down, both up, both down. Yields and the stock market track each other. No matter what anybody says that yields going down are bullish, yields going down are not bullish. Yields going down are reflective of economic conditions that are bad for the stock market. See these blue arrows right over here? This is one of the rare times when they were going in opposite directions. This is 2014, 2015, where the stock market rallied and yields were coming down, and right over here. Eventually what happened was they got in line together because the stock market fell, and in through 2016 was this mini bear market that saw some indexes down about 16%, some were down about 21%. So eventually the stock market got in line and moved to the downside here. Here you could see both moving up together, moving down together. Of course, this was 2020 and COVID, where the stock market fell and yields fell very sharply. Right over here and here, they both moved up together here, 2020 through the peak in 2022. Right there, little bit of downtick here in yields, and the stock market right there, there should have been a down arrow right there. And here they're moving up together. Here they're moving up together. Here they move down together right there. And here we are again, one of these unusual situations where yields are falling and the stock market is rising. Well, remember what happened over here. Eventually what happened was that the economics told investors they better sell, and the stock market fell. And I'm just going to take a wild guess based on the fact that yields are falling and these correlations get in line that the stock market will peak and have a sizable decline in here as investors start to realize that this slowing economy, even around the world, is likely to continue to bring interest rates down, put a squeeze as the economics get worse, it puts a squeeze on margins, and this period where the AI tech sector lifts the market will end, and eventually we're going to go into a corrective period. We're preparing a big picture analysis looking at amazing correlations in the market. I don't want to give too much away, but we're going to show that to you where we think that the bear market will come following this, and how deep it potentially could go. And a lot of markets that are correlated in that way. I don't want to give too much away, but that is coming up. That shows you that interest rates and the stock market move together. No matter what anybody tells you, here's 26 years of it, that, about 90% of the time or more, interest rates and the stock market move together. Interest rates now going down. The Fed likely going to be cutting well into next year, and that can only mean the economy has problems. Stock market analysis. We're going to look at the stock market and the market condition monitor. We're going to look at the S&P 500 today. Now, I want to remind you that RV hosts Future Speak every Wednesday. He does over 20 different futures contracts in the indexes, metals, currencies, foods, energies, and crypto. And that's every Wednesday for levels 2, 3, and 4. So if you want to see all of that analysis, and you want to see these other indexes that I'm not going to cover today, then he can show that to you. And that will be a great example of all of the analysis that we do in all of these futures contracts. And the analysis, I think, has been absolutely spectacular, led by our momentum indicators and cycle analysis that put those together, and they're extremely valuable. All right, so let's switch over now and look at the S&P 500. We're going to go back and forth between the charts on different time frames and our market condition monitor, because I want to look at it a little differently today. I want to really associate the tools that we use and the charts that we use together, and how that fits on particular different trading styles. So even for investors, and that's the first one we're going to look at now. So here's your S&P 500, and the charts that I'm going to look at that are in here that I think are just a great way to see how these work together. I'm just getting my pointers up over here. And this is the weekly, this is the daily, and this is the 2-hour. And I'm going to show you all the way down to 3-minute charts as I pull up our day trader platform for you to see. So let's just start out here looking at the this chart here on the weekly. So when we do our cycle analysis, of course, we look at the repeating rhythms in the market. And if you look at this, you can see that they're really exist. On the bottom, there are actually 2 overlapping ones right over there. One of them is RSP equal weight. The blue one is the S&P 500. You can see how they came down together in this troughing period right over here. And they came down together here, and came down together here, and came down together here. And yes, there's another one of those periods where they're likely to come down together right over here. So the first thing that we want to look at is the value of the reversal scout. Now, the reversal scout right over here turned upward. This is our momentum indicator that I love to use on the weekly chart that really does a great job of helping us define the rhythms in the market, the heartbeat of the market, or the cycles that you see in here. There's a minor cycle right there, and that you can see defined here, a second minor cycle, and when they both came down together, that was this big break in the stock market. And then they moved up again. This upward move was a little bit earlier than I expected, so I thought it would test this low. Of course it didn't, and when we got this upward turn, it was pretty clear that what I expected was not happening. Here's your minor trough. This is amazing. This is a swamped condition. Swamped meaning that there are forces bigger than this that were preventing a decline to come that was lasting. So in other words, the correction could have come here from the middle of the minor cycle, but it rallied all the way towards the end and past the end of that ideal minor cycle and gave us that trough. And that was just unbelievably bullish when you see that kind of condition. And then it's continued to move up. Now it moved up here. We had another fib extension below it, which it moved through, and it moved up here. And right now these fib extensions are pointing to a potential resistance right where it got up to here, around 65.90s, right there, or up over here around 68.25. I keep saying I can't believe it's going to make those higher levels, yet it keeps doing it. So if you were an investor, you want to be looking at these longer term conditions. When you look at the stock market and you see this, you say, well, it's not giving me any reason to sell other than the fact that it's prudent to lighten up when things get to extreme levels in the stock market. So an extreme level is looking at the fact that it's trading at 217% of GDP. That's an extreme level. It makes sense to be lightening up on your long positions. It doesn't mean to, go short. There's nothing that says here to go short. An important thing that I like to look at is the distance from the 34-week moving average. So I'm going to go into studies right over here, and I'm going to edit studies, and I'm going to add in a simple moving average right over here, and then I'm going to change this to 34 weeks. Those of you that are on Thinkorswim, you'll know how to do this right there, and I'm going to say, I'm going to make this a little wider line, and I'll say okay, and I'm going to apply that. So now what's important for you to see is that during these cycles right over here, during the rally phases, it gets far away from the 34-week moving average, and then during the declining phases, it tries to get through them or approaches them in some significant way. Most of the time, it will continue to move down through that moving average, and you can see going way back over here, the very common bullish times where it tries to get down to it but can't, and when it turns bearish, it breaks down through it, as you can see. And look at how far we are from that 34-week moving average right there. So right over here is a 23% retracement level, 61.83 right now. That's would only be like 7 or 8%, pullback in here, which isn't very much. But you can see that each of these cycles, it does approach that level over there. So that's really something that we should have in mind. So if you were an investor that was lightening up over here, you might be thinking about, well, if it pulls back in here, I'm going to be a buyer again, or those people that don't have positions on that they would like to have on the long side. Well, there would be your opportunity. Let's pull up our market condition monitor and look at it for the longer term holders. So I have this set to intermediate. So this is all of the styles right over here for the trader type right there. And you can look at time frames or trader right over there. We're going to look at these 4 indexes right here. And you could see that if you were an investor, you could see that this is keeping you very bullish. Here the SPY in August 11th went from bullish to very bullish, and you can see these dates where it went from bullish to very bullish, and it's just telling you if you're an investor, or a longer term position trader, well, the market has kept you on the long side. Looking at that, and I think it's really important for you. If you're not a askSlim level 3 or 4 member, then you wouldn't have access to this. but I think it's really important to be able to look at that. If you're, we're going to look at it all the way down to short-term intraday traders, and that would be only for level 4 members. So let's go back here to the charts now and say, well, if I was a shorter term trader, then I would be looking more at the daily charts. And you can see in here the alignment. Now, I was confused on these cycles for a while because the Russell is out of phase with the S&P 500, as you see here. But last week we said everything is still bullish, as I showed you every one of those indicators. The option bias indicator, all the way since back over here in April, has said keep your positions on the long side. Your slim ribbon PO, again, these are both level 4 indicators, kept telling you green positive and giving you momentum resumptions with those green arrows. It's never been red. You got to go way back in here to get conditions where this was red, right over there. So the market has kept you on the long side, both on the weekly and on the daily. Now, we pointed to the resistances up here, and this is 65.88. The next one up here around 66.61 on the short term. And the market just doesn't want to go down right now. Even today, here on Friday, the September 12th, while we have pretty significant negative breadth in the Dow and the Russell moving to the downside, the NASDAQ is still finding bids led by Tesla, which I said earlier in the show is the #1 shorted stock in the Mag 7, and that stock is leading on the upside today, along with a few of the semiconductors. So we're still getting the NASDAQ moving to the upside, but these targets right over here, right here in the low 65.90s, here up around 66.67, right up over there, something like that, is where this fib extension zone, it's a target and resistance zone right over there, and it's gotten up there. Everything in here is still bullish. You can see this is where the period in here where the S&P 500 and the Russell both have corrective phases right into here. So this right over here is late September through early October, where this could pull back. If it holds above that key level right over there at the 63.60.58, then that will tell me that things are still okay. And maybe if it gets only into this rising support right now, which is just below 6,500 to down to around 64.50, if it comes down into there and then moves up again, well, we'll know that things are still good, as this upside movement is dominated by this upside movement on the weekly chart. So you could see how you use these together, weekly momentum pushing up so hard, it's keeping the daily momentum in there pushing up also. So right now, everything in here is still bullish. It would take a significant amount of selling to change that. And again, late September to early October, we would expect one of these corrective periods. These cycles have been very bullishly shaped, and maybe this one will turn out to be the same, and maybe it won't. So we'll just have to wait to see. In the meantime, it's really super positive. Let's look over here as we look at the short term, and you can see also very bullish, very bullish, very bullish, very bullish. I mean, this has really kept you looking at things that are very bullish. You want to know the stocks that are very bullish on the short term? Well, you can see that right in here by scrolling right there, and it gives you a good sense for all of the stocks that are very bullish. You want to see the ones that are very bearish, and you can see that right over there. Caesars, earlier in the show I mentioned MicroStrategy. I think that is the canary in the coal mine. I'll say it again for Bitcoin, which I think is going to end up going much lower. And these are the positive the negative looking stocks in there. And you can see PayPal, Union Pacific, Chipotle just as terrible, Starbucks. These are stocks that have been bearish in there. So that is a look at the short term and how this could help you. As you can see that these are all very bullish, and you're going to have to get some deterioration to get some sense that this is changing. So here is your look right over there at the short-term chart on the daily chart, still positive as we can see. the expectation that it would hit this area and potentially up here at 66.64. Remember that the area way up here on the weekly up there is at around over 6,800. So if it gets through this level, that would be the next place. That's why we have two projection lines that are in there right there, and two projection lines that are here on the short term right there. All of this still pointing to the upside. So if you were a short-term trader, very short-term, we'll call it near-term or a day trader, you'd be looking at different things. And I'm going to switch over here to the 2-hour chart. So what I have in here is a 2-hour chart, but I have overlaid the daily cycles in there so that you can see. Here we have the market condition monitor, the market condition indicator, which you can see has been very, very bullish for a long period of time. Here it was bearish, and then once it crosses through that swing zone, here it gives you the bull signal. Here it tests and gives you more bull signal. This has given you great bullish signals. And here, every time there's a correction, I'm going back to right over here, it then gives you a sense when it's going to be positive again on this slim ribbon PO, again, a level 4 indicator. And when these turn up right over here and you get these indicators, that really gives you a good sense for the intraday. So if you were an intraday trader, you were some kind of a trader that, traded intraday swings, or even a scalper, this could give you a good indication of your directional decisions. Because when they're shaped this way, positive reversal scalp, positive slim ribbon, firing here telling you momentum moving back to the upside, your bias has to be to the long side. I mean, you wouldn't be taking short side trades. So this gives you a great sense for how you would, as a scalper even, or a short-term trader, the kind of things that you might use. However, there's more if you were a short-term trader, if you were a day trader, I want to say, and that is how do you really get a good sense for what's going on intraday? Well, I'm going to switch over now to our day trader right here, and this is what we broadcast all day long. This is now live. This is our day trader cockpit. There are two different cockpits that are in here. So you can see, I'm just going to go through this quickly. The impulse monitor right over here is a general sense for directional conditions for what's going on right now for the day. In other words, when it's green, it's telling you positive conditions. The turbo on just went off. You could see that was on there, and that was telling you there was buying coming in, but now that seems to be slowing down. And you could see IWM and DIA. These are negative. So if you're a pair trader, you'll be able to pick out which ones you want to be long, which ones you want to be short. This is my 8-minute strategy. We've got stuff built in here in our new trader radar in there. And this timing line that's in there is very important because you could see it was driving to the upside here in the SPY and QQQ, while the IWM and the diamonds were going to the downside. Well, it couldn't be any clearer than that. Here you could see the negative conditions on the trader radar. Here you could see the positive conditions on the trader radar. And when it goes yellow, well, that gives you a sense for things are stalling. And certainly they were stalling at that point. Now it's going gray. Here is the trader cockpit. And what we're looking at right now is the fact that, well, the S&P 500, and you could see here on this reversal scout right there, that's kind of the longer swing. That tells you, well, the things are, not necessarily very strong. Here's your swing trader line, and that's now turning down. Here you could see the NASDAQ has been strong and it's gotten into the yellow zone. Generally, when it gets into the yellow zone, it will move through between 70 and 100% of that. Now, this is starting to struggle a little bit, but normally you can count on that. And then you get the key support and resistance levels. And here you could see the Russell has started to come down with support here. If it gets through that level, then it will likely accelerate down through there into this next support. Also, you could see the trader radar that's in there. and it really helps you get a sense. Look at the NASDAQ where it was telling you that it was positive versus looking here at the Russell, which was showing you negative. This is pink. It will turn dark red when it really starts to move down with intensity, but right now it's kind of a light red or pink telling you negative conditions. Let's head over to Cockpit 2, because if you're a scalper in the futures, this is the one you really want to look at. And this is just absolutely fantastic. So you can see in here, the top here is 15-minute, 8-minute, and 3-minute in the ES. This is 15-minute, 8-minute, and 3-minute in the NQ. And you can see that these things just were screaming at you that they had positive conditions right over here. That's the 3-minute, and this is the 8-minute where it was pushing up and telling you in the ES. These were periods you wanted to be scalping or trading on the long side right there. And then it started to stall on the 3-minute right over here. So you don't really have a trade here. This is neutral. This is now telling you a little bit negative right over here. Here it was screaming at you in the NASDAQ. And these were big trades in here because it turned bullish on the 8-minute, giving you some sense around the where you want your directional decision to be up until where it started to lighten up and turn yellow. You can see in here it really accelerated up where it moved up from 2440 right over there all the way up here through that was 24,040 all the way up here through 24,107. So it was like 65, 67 points on the upside right over there for the scalpers. And that was just a beautiful thing here. You could see that the 15-minute was green over here also. So I like to use it entry, exit, position direction, and position size. Where your size would be bigger when this matches up, because when all three of these are positively green, it then tells you that the probability is higher that the impulse will be strong in that particular direction, which was the upside, of course. And when they're all dark red, the probability will be high at moving to the downside. So you can see the incredible value in here for scalpers when you look at that. So that's Cockpit 2. This is Cockpit number 1. And wow, do you have fantastic information for the purposes of day trading. So let's go back to that intraday chart right over here. And you can see in here, I showed you only out to, the 15-minute, but this is the 2-hour, which kind of dominates it all. And it was really giving you a good sense for, if you were an intraday trader, well, this is really for the near-term conditions right over here. If it was like, let's just say 1 to 3 days, looking at that and then potentially putting that together with what you have here on the daily. So when the daily is driving up, you have a long-term, you have a long side directional decision. When it's matching over here, well, your trades are going to be to the long side. And over here, when the weekly is showing you this kind of upside move, as you see right over here, then your position size is going to be greater. Position size, position direction, in and out, exit, and entries for, let's say, swing traders, option traders for 1 to 3 days. And of course, if you want to go to the intraday scalping, intraday swing trades, then you're going to go to the cockpit right over there and be able to get the important information that you need for your intraday trading. So this is how you bring it all together using our information and your styles. What am I bringing together here? I'm bringing together not only the cycle analysis, but the momentum conditions, and looking at them from weekly, daily, 2-hour, 15-minute, 8-minute, 3-minute, and putting it all together, how you use it as a trader. And that gives you just a great sense. Remember that we're running the special right now, just $99 for 3 months with a trial period of 14 days. So sign up. If you don't like it for the first 14 days, we'll give you your money back. And then you can get a good sense for how to use it, or whether it really fits who you are as an intraday trader or not. And of course, all of those proprietary indicators that I showed you that are for level 4, well, you have to sign up for level 4 to get those And we also are running a level 3 special now, which gives you a lot of our information and also our charts in a static form. So you can go to our website and see both of those specials that we're running. Or if you have any questions, write to Matt at askSlim.com. That's it. You saw our amazing stock market MCM included in level 3 and level 4. If you want to learn more, if you're just getting acquainted, sign up for the Snapshot Lite for free. That go up to our free stuff, and you'll be able to get that on YouTube. Subscribe to our channel, click the notification bell, and do like this video. Give it a thumbs up. On X, follow us at askSlim, and any questions you have, write to Matt at askSlim.com. I want you to be so careful because it's so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been